G'day everyone, welcome back to Pete's Investing. Today is April 1st, 2023. This is the S&P 500 update. On all three timelines, the daily, the 4-hourly and the hourly, the timeline, the CCI 1500 is broken up through the moving average. You can see here, except on a daily, the daily is still in a downtrend on its moving average, but it's kissing, the CCI is kissing the moving average. So potentially we could take long trades from here, but just be mindful it may bounce down from this descending trend line. I'll drill down on this to show you a bit more clearly. So I've got this support and resistance lines, this red and blue support resistance lines. It's been bouncing in that range for a number of months now, but also this descending diagonal trend line. And that was drawn back here since the start of January 22. Now, so it's touched on the top of those highs recently, and it's at that level at the moment as we speak. Just be mindful, we do use the CCI as our key indicator because it gives us a bit more clarity than the moving average of the price chart, the moving average 200. So where the moving average 200 showed here it broke below the price broke below the moving average on the price chart, you can see here it gave us a bit clearer warning a few months earlier where the CCI broke below its moving average, and you would have got out of going long in that period. Now you might have said, okay, well, we've missed out on that little range there to go long. But again, that's just being a bit risky because that could have continued, that could have broken to the downside from there, or it could have given a different result like it did here. So we want to try and take any leading indicators like this one to give us a bit more confidence in trading. That's on the daily chart. Also on the daily as well, I just want to give you a quick Fibonacci retracement between that low and that high. It did break above the 60%, although it was in there for some time. Then it finally broke convincingly above that, and it broke above the 100%. Whenever your Fibonacci breaks the 61% to the upside, it generally means it's a break. It's a discontinuation of that trend. In this case, it discontinued the downtrend. So whenever it breaks 61% and goes up, it's a reversal of a trend. Normally we see it reverse back down from the 23, 38 or even 50, 60% level to the downside. In this case, it didn't do that. On the 4-hour chart, you can see that a bit more clearly. It's still in an uptrend above its moving average on the CCI, but I've also drawn this wedge, these two diagonal ascending and descending trend lines. And as I said earlier, it's broken the upside just slightly through the upper level. And again, on this Fibonacci retracement, it's currently sitting at the 78%, which is typically a reversal from this previous downtrend. So we may see further upside, but just be mindful there is this key resistance area here at that level there, at the 4200 level. And then lastly, on the hourly chart, very similar sort of story. We're in an uptrend currently with a moving average of the CCI in an uptrend, and it's reaching this diagonal descending trend line. What I will do in terms of a trading idea, I'll include these fractals. It looks a bit busy, but I'll explain that in a bit more detail. There's plenty of trading ideas on some of my strategy playlists. I reference that after this video, but here we've got, for example, whenever you see the moving average of the CCI moving to the upside in a long position, such as where the moving average here is green, that's where you take long trades. And here I've got these lines surrounding these two, surrounding the bars or the candles. You take long trades when the moving average of the CCI is in an uptrend, and when back there, for example, when it freshly breaks through the upper fractal. So that's where you would have gone long at that point there. And I've got here as another blue line, which is basically the target for that entry would have given us, we're aiming for a 1% target. So you would have gotten out of the trade on that candle there when it hit that target. Likewise, you're still in the uptrend here. The next potential entry would have been that candle there, and that would have been your target at that point. Now you wouldn't have got out of that trade until way over here a few days later. So we're only talking a few days from the 22nd to about the 31st of the month. So again, further entries would have been down here. That would have been potentially another entry there when it broke above the fractal, and that would have been your target, and you would have got out a few hours later, and so on and so forth. So you get the picture. Avoid going long when the moving average is in the downtrend, like in this case, and only take short trades when it's in decline, and only take long trades when it's in an uptrend. So basically, in summary, we're still in an uptrend on most of them. The daily is just breaking up through there as we speak, and in the next day or two, this moving average if this continues, this moving average should turn green and start turning into an uptrend as well. So I don't understand how to properly trade using some average down approaches. Reference the playlist in the link below. Subscribe and like the channel. Reference also the Patreon page if you want to support us further there, and we'll see you in the next video.